I ask you to get to this point. Okay, let me turn off the light. And you're going to be calculating financial ratios. And if you use the raw data, it's a lot of numbers. It's not grouped by, it doesn't, well, it says first quarter, second quarter, but it's a lot of numbers. And you can do the calculations here, but you won't have a nice table that you can present. For instance, let's do the calculation of the current ratio. And the current ratio is equal to current assets over current liabilities. So we can find them. I don't know. You don't have to do this. I'll do it in the raw data just so you can see. It's that where do you put all of this? But current ratio equals current assets, which are right here, over current liabilities. Right there. So that will be the number. And then you can copy the equation and do that for every year. A better way to do that is if you go to your pivot table, and I'm right here, we can do the same thing. And let's go to, click on your table, click on Analyze, and we'll be creating equations like we did last class. And then you click on Fields, Items, and Sets, and mine is not. Okay, so click on the date, click on Fields, Items, and Sets, and then click on Calculated Field. And the name of this one is going to be Current Ratio. And we're doing Netflix. And then what is the equation? It's equal to, so in the list of all the different fields, find total current liability, total current assets. Double click on it, and then over, and then find total current liabilities. Just right here. And then you can click OK, and it's right there. Okay, the equation for current ratio is current assets over current liabilities. So that's what we did right there. Now, let's do all the category of liquidity ratios. So I'm going to rename this one liquidity ratios. Okay? And that way you can have one section for all of the liquidity ratios. In the model number 1, you're going to pick a company. It cannot be Netflix. I'll give you some guidelines. You pick a company and you have to do all of this. Download the data, accommodate the data, and then do all the ratio calculations. So you'll have a liquidity section. And then you have to tell me about the liquidity position of this company. Okay? Let's do another liquidity ratio. Is the quick ratio. Does anybody remember what the quick ratio formula is? So it is current assets minus inventory over the current liabilities. What is the rationale of doing this ratio? Of the 3 current assets, cash, receivables, and inventory, the inventory is the least liquid of them. So if you want to know if the company is really liquid, let's remove it so we can find what the liquidity position is. So I'm going to click on the table again, go to Analyze, click on Fields, Items, and Sets, Calculate Field. So now let's calculate the quick ratio. And the equation, you have to open parentheses, equals total current assets minus, and then find inventory. Problem, Netflix doesn't have inventory. Because, well, you know, they do have movies, but I guess the CDs, but I can't find it here. Payments. Okay, so we can do the quick ratio for this company, and that may happen to the company you pick. Now, there's another liquidity ratio, and it's equal to the cash ratio. So we can calculate that one. So scrap quick ratio, let's do the cash one. If the company you choose, you know, there's one ratio that you can't calculate, just tell me. You know, let's say we chose Netflix and they don't have inventory, so we can't calculate that ratio. Just put a note so I know. And the cash ratio is equal to cash and in this case, there's several options here. Cash and equivalent, short-term investment, cash and equivalent, and short-term investments. Now, the formula, if you look at it in a book, it's going to be cash over current liabilities. But in this case, Netflix has those short-term investments. They're very liquid, so I'm going to include them in the cash ratio. You can call this one the liquidity ratio. So over current liabilities. So I'm doing cash and short-term investments over total current liabilities. Click OK. Shouldn't replace it. Okay. Now, so it's going to do that, and that may not be the best way to present the data. So let's look at the different way we can do this. Values. Okay. What I did, I had values here in rows. I move it to columns. Yes. Okay, so you click on your table, go to Analyze, and then there's option here, Fields, Items, and Sets. Click on that one, and the first option is Calculated Field. Okay. And then here, you name the formula, cash ratio, and then where it says formula equals, so equals, in this case, it was cash and equivalents and short-term investments over total current liabilities. Now, it has a lot of decimals. It's going to look better if we do this. I'm going to, yes. And so there are three main liquidity ratios: current ratio, quick ratio, and the cash ratio. We can do the second one, so we have those two. More than likely, the companies you choose, they will have inventory, so you can do all three of them. Okay. And I hope you appreciate how quickly you can do. Once you have your data and you clean it up and it's all ready for pivot tables, you can do ratios like this. And you have all of them, and it's on a quarterly basis. Now you can see, has the company stayed liquid over the 5-year period we have? If you look at the current ratio, it's always above 1. So it has to stay liquid. Now, when you look at the cash ratio, it's under 1. What does that mean? Does it matter that it's less than 1? Should it be greater than 1? What do you recall about the cash ratio? Because the formula is equal to this. Cash ratio equals cash over current liabilities. Okay? So if we look at this one right here, 0.56, what does that mean? For every dollar in current liabilities, the firm has 56 cents in cash. So the company does not have all the cash they need to be able to meet those current liabilities. Will that be a concern to you? Let's say you're the manager. Let's say you lend money to this company. Will that be a concern? If you look at the current ratio, the equation equals current assets over current liabilities, right? So when I look at the 1.42, what can we say? For every dollar in current liabilities, the company has $1.42 in current assets. So when you look at the current ratio, the company is liquid. When you look at the cash ratio, the company is not liquid. Will that be a concern to you? Let's say you run this company, or let's say this company is looking for a loan. Will you lend money to Netflix based on those numbers? Why? They do have the assets, right? Now, if every creditor short-term shows up the same day, Netflix doesn't have the monies to pay every single one. They only have, what, 56 cents in cash for every dollar in current liabilities. Now, that's not going to happen. They're going to be showing up at different points in time. Same thing with those liabilities. They're due at different points in time. The assets, they will be cash at different points in time. Because what is the definition of a current asset? It is one asset that will be cash within the year or less. So they do have the money. So what else do I want to see as a manager? What else is included in current assets? Receivables. So is the company collecting those receivables on time? Is it not? So you have to look at the whole ratios to be able to make a decision. But those numbers as they are, if that's all you have, the company seems to be doing okay. It's just like banks. When you deposit money in the bank, what does the bank do with that money? They lend it, right? Now, they have to keep some in reserve by law. But if we all show up the same day to collect, to take the money out, the bank only has a proportion of all of those savings. The rationale is that we don't tend to do that. We show up at different points in time, so the bank can do with only, what is that called? Required ratio, okay? Required reserves. Same thing, applies right here. Now, we can do some trend analysis here, and this might get erased. I don't know. We'll see. But if I click right there on the table again, let's click on Analyze, and then click on this option, Pivot Chart. And it's going to give you a lot of different options. For this type of ratio, the column works really well. And Excel is pretty good at sort of guessing what you're looking for. So I'm going to click on this one, click OK, and there you have it. (2012) through 2016. Blue bar will be the current ratio. The orange will be the cash ratio. Do you see a pattern here? Well, yeah. If you look at the current ratio, it's sort of consistent. There's a big jump in 2015, and then it's been declining. How about the cash ratio? Again, sort of consistent. It's okay to have volatility. It's not always going to be the same. Beginning in 2015, it's been decreasing. So even though the company is liquid, Will that be a concern to you that is declining? Potentially, it means the company is getting into potentially liquidity issues. Okay. What else do you think might be going on with this company that might explain that decline in the cash ratio, current ratio? And I chose Netflix because I know you guys use it, so you might be aware of what's going on with the company. You may not. Any guesses why they might be declining? Investments in what? What does Netflix invest in? Original content. If you go to Netflix, it seems like more and more Netflix original. That's very expensive. That takes money. So they're using money to invest in that. That would be my guess. Then we have to go and read more about the company to see what's going on. But if you're the financial manager, if you're a bank, if you're a stock analyst, you see that, you see the decline. Is that a concern? Well, let's go dig and find out about this company. If you're a financial analyst for a big company, you might even call the company. You can talk to the financial people, say, what's going on here? I follow your company. They know you because you work for a company like Goldman Sachs. So there's that relationship, but you can see those trends. I'm going to show you the case requirements in a second. And something you can do is copy and paste that graph into your report, and then you describe to me. You don't have to dig too deep into your companies. You don't have time for that. Just show me different patterns and what's going on with this company. So if you were doing Netflix, which you can't, because you can't use Netflix, it's the company we're doing in class, you will have to do this table right here. You will tell me we can't calculate the quick ratio because the company does not have inventory. And then you will make the graph, and then you will tell me the company's current ratio has to stay above 1 throughout the period. So the company has remained liquid. We do see a decline in the current ratio in the later 2015, 2016. And then you can talk to me about the cash ratio that is also declining. And if you know something about the company, just tell me what might be your hypothesis. The company's liquidity is getting compromised, or the company remains liquid, but the cash has been declining because the company is investing in original content. So that's what I'm expecting in your report, that you can use Excel and all of these tools so you can give me a picture of the company. Okay? And then you have to go through all the different ratios. What are the categories we talked about in class? Liquidity, efficiency, debt, profitability, and market. So I want to see right here, just for liquidity, another one for efficiency, another one for debt, another one for profitability. And then copy and paste your graphs into Word, and then you can describe me the position of all of those categories. Since I'm discussing this, let me go to Excel. Blackboard. I added this section, and that's model number 1. So I'm going to click on this one. Taking a little while. So this is a group model project, 3 students per team, up to 3. You're going to send me by email the Excel and the Word file. I'm going to give you until next week. I'll give you the day at the end of the class. You also have to bring a hard copy so I can grade it. You're going to select a domestic public company. Okay? For instance, do not select Alibaba. That's the Chinese Amazon. They trade in the U.S. market, but it's a foreign company. So when you go to Mergent Online, you're not going to find all of the financials. And then it has to be, the company has to be public for at least, I say here, 5 years, I believe. Okay. So you can do the same thing we did with Netflix. Alibaba has been public only since 2015. So it's 2017, it wouldn't qualify. So just make sure that you pick companies like Google, Apple, Microsoft, or maybe smaller companies, not well known, but domestic, 5 years, public. So when you go to Mergent Online, you can download all of the financials. And then you have to do the following. Oh, also make sure of the following. The company, to qualify, has to have debt. So when you go to the balance sheet, look at long-term debt. Let's look at this company right here, Netflix. If I go to balance sheet, where is it? Right here, LT debt, you see numbers. So you can calculate the debt ratio. Some companies don't have debt, and then you're not going to be able to calculate the debt ratios. So just make sure of that. Most companies have debt, so you shouldn't have trouble there. But make sure before you start doing all of the work, and then you have to switch companies. Okay? And then you're going to do the following. From Finance Yahoo, you're going to download 5 years of monthly stock prices. And you're going to be doing the same thing we did last class, where you have all of the data, you calculate the returns, and then you have to calculate the max and the minimum and the average and the standard deviation, the way we did it in class. And then you have to make a histogram. Okay? You have to, I guess if I open, let me see. This is what I mean. You have to do that analysis with the company. We did it in class. So you download all of your stock prices, and then you make a graph of the closing price, adjusted closing price. If you see a big difference like that one, then go find out if the stock was split, and then you can tell me what was the split ratio. If they're all the same, they overlap, then the stock hasn't been split. Just tell me, we don't see a split in the time period. You have to do this graph as well, and describe to me that mean reversion pattern that we discussed in class. You have to calculate all of the statistics, this right here. Tell me how many are positive, how many are negative. All of that is described in the model. So you do that first, and then you go to Mergent Online, you download the financials, and then you go through all of the ratios, which I describe right here. I try to be very specific so you can go point by point. Now, as far as ratios, and we're going to do some more today, here are the 5 categories: liquidity, activity, debt, profitability, market. So this is what you have to calculate, all of those. Current, quick, and cash, unless you can do one of them. Activity, I want to see inventory turnover, average collection period, average payment period. So just find the formulas in your finance book. The principles book, it has all of those equations. From book to book, sometimes the equation is a bit different, and they tell you sometimes why they use this or that, add something, remove something, but go with the basic equation, so you can do all of those calculations. Okay. There's one graph I'm going to be asking you to do. Let me go to the raw data again, and let's make a new, right here. That's where we got all of the data ready. Let's make a new pivot table. So if you select all of that, insert, pivot table, and then let's do years, and then I'm looking for quarters. It was okay. I didn't see it. Well, it's not in this one. See, there's a lot here. Is it date, maybe? Date, okay, it's date. Okay. And then I want to go to the income statement and do sales, or total revenue in this case. And I want to do net income. And then make a graph of that, pivot chart, So this one is described in the model instructions. And what do you see in this graph? Because the whole point of using Excel is to give you guys the ability to do analysis on a company, not just to make nice graphs. Without Excel, it's really difficult to have all of the data and manually calculate all the ratios and manually do all of the graphs. Here we can do them very quickly. Yes? Total revenue, net income. And once you create the pivot table and you add total sales, right, you click on Analyze, Pivot Chart. It's using column. You can use line as well if you want. And then you click OK. And by the way, if you try to do this type of graph using the regular charts in Excel, where you have year and then the 4 quarters, I don't know how to do that. It may be possible, but I only know how to do this using pivot tables. So you have every year, and then you have every quarter. So what do you observe in this graph? Let's say you're doing analysis, and you see this right here. Give me a few observations. So sales are going up, and that's good. That's always a good indication about a company. But when you look at net income, after they pay for all the expenses, that's more or less flat and constant. Why that might be happening? Sales for Netflix is what? Number of subscribers. So that's going up. So they have more sales. But because they're investing heavily in content, the expenses have gone up. So you see your net income is more or less flat. So what does that tell you about running a business? Making money, it's really, really, really difficult. And for every dollar you sell, most of that's going to be expenses. It's very little what you get to actually keep. Why are these companies wealthy? Because they sell billions of dollars. So the net income will be also a large amount, but it's going to be small relative to your sales. Now, sometimes the scale can be misleading. So what if we do the following? If I right-click on the orange bars, we can do the following. I believe we can format. Okay. So if you click on Format Data Series, you can put that in your secondary axis. And I don't know, sometimes believe you can. Sometimes it puts the bar next to the other one instead of overlapping them like that. I think it looks better this way. I'm going to show you something else. When you do pivot tables, if you click here on years, you can uncheck some of those. So let's say you want to have only 2015 and 2016, uncheck, and it'll automatically give you those years. If you don't use pivot tables, you do it manually using the raw data. You want the new graph, then you have to go and select the data again and make a new graph. Here you can add and remove. If you only want the 4th quarter, let's say you can remove here 1, 2, and 3. Click OK. So you have So you can analyze seasonal patterns. You can analyze only one quarter, 1 year to the next. So it's really neat when you have pivot charts. You can do a whole bunch of stuff. Questions about what I'm expecting? Show you another couple of commands in Excel. If you open your Blackboards, you will find this section right here, this file, HLOOKUP, VLOOKUP. Those are Excel commands. We're going to open the files. In Excel, anytime you input a new equation, you do equals, the name of the function, and you open the parentheses, and then it's going to be asking you for different arguments. So those are the arguments that the functions uses. And let's go to the example, this one, VLOOKUP. V is for vertical, and H is for horizontal. And you're looking up data in a table, but the data can be vertically organized or horizontally organized, and that's the difference. So I have the same example, just vertically and horizontally presented. So I'm going to click on VLOOKUP, and I have the following. These are the 2016 taxable income brackets for single filers. So that's somebody who files taxes as an individual, single. Okay? And these are the brackets. I got this ones from the IRS website. So if you make up to $9,274.99, you pay 10% in taxes. If you make between $92.75 and $37,650, then it's 15%, 25, 28, 33, 35, and 39.6%. And then I have a bunch of taxpayers here. I was coming up with names, and then I said, well, just taxpayer 1, 2, 3, and 4, make it easier. And I just made up a bunch of different revenues. So I want to find the marginal rate for each one of those taxpayers. And when you have 2 or 3, it's easy. What will be the marginal rate on Bill? If Bill makes $1 more in income, how much is that dollar going to pay in taxes? So it's 46,000. That will be right here. It will be 28%. Because it's more than 37,650, but it's less than 91,150. So if Bill makes $1 more, like 46,501, that $1 will pay 28% in taxes. But when you have to do that for every one of those, there's a better way to do that. So this table is organized in columns, so it's vertical. So we're going to do the following. Click here, and then do equals, and the function is VLOOKUP. And you can see in your screens that the first argument is lookup value. So it's going to be looking at this number in the table. So I'm going to click on the 46,500. Okay. And then I do not want to log that one, because when I copy the equation, I want them to look for this number and the next, etc. So I put a comma. Now it's asking for the table. Okay. So you have to, what are you going to be looking for? So I'm going to highlight the table, including the labels. It has to have labels, like that. Now, it's always going to be that table, so I'm going to press F4, and it's going to log A3 through B10. And then I put a comma, and it's asking you for the column index. Okay? That's what you want as output. So it will be column 1, column 2. I want column 2 to be given to me, so I'm going to put a 2 right here. Okay. And then, do you see that after that it has range lookup in brackets? All the others are not in brackets. When you see that in Excel, it means if it's not in brackets, you have to give something to Excel, an argument. If it's in bracket, it's optional. You can input the number or you can ignore it. So for now, let's ignore that one. So I'm going to close the parentheses and press. Why did I open two parentheses? That's why that was. There you go. So it is 20. Well, it's actually 25 because it has to be at least 91, 150 to pay 28. Okay? So let me make that a percent. So Bill will pay 25%. And then if you double click here, like that, then you have the tax rates for all of those individuals very quickly. I used to not cover this command in Excel, but one student went to an interview and said, can you do Excel? He did a bunch of functions. They asked for this one, and he didn't know, but said, okay, it's okay. You know Excel, we can teach you this one. So he got the job, but it's better if you know this command. Okay. Now, I'm going to double click on this one and click on the number 2 and put a comma. So you get that option, true or false. Okay. The default is true, so you don't have to input anything because that's the default. And if you see it says true approximate match. Now, the income for this individual is what? 46,500. You don't find that number in the table. So Excel is going to find the closest one to 46,500 and then give you back the tax rate. If you make this false, see if I think you have to type false here, then it has to find an exact match. So if I press enter, it's NA. It didn't find it because it's not in the table. So sometimes you may want that given the application, but in this case, it will be true. Why it's not liking that one? I think you have to put 1 or 2. Let me see what the argument is. Yeah, you type true or false, but it will be that's the case. Now, go to HLOOKUP right here. And see, we have this exactly the same table, same individuals, same incomes, but now it's in a row horizontally. So try doing it yourselves. Find what will be the marginal rate for Bill using the HLOOKUP command, please. So that would be the equation. Same thing, except you have it in horizontal. So it's looking up for this number in this table, okay? And then what do you want back from the table? In this case, it will be row number 2. So once it finds the income here, it'll give you back the number, the tax rate. See, if I change this to 1, it'll give me back this number right here. Because now it's giving me back row number 1. But I'm looking for the tax rate, so it makes more sense to ask for number 2. Okay. Same thing with VLOOKUP. For now, you're not going to be using HLOOKUP or VLOOKUP But for your model number 2, it's going to be based on real estate, and you're going to have to use those commands to give back the user the payment on a given month. So you're going to have the table with all the payments, and then you can use this to say, well, my payment 36, how much is the payment, how much is principal, how much is interest, etc. So make sure you know this well. You're going to be using it later. Okay. I did the VLOOKUP example first, and then I copied this into the HLOOKUP. I didn't type it. I copy and paste. How did I transpose? Okay, because you have to use that for the financial ratio. You have to transpose. So if I do this, copy, and I'll do it somewhere here. You go paste, and then you go paste the special, and then transpose. But you also have options right here. And this one right there, it's also the same thing. So you don't have to do paste the special. So you click on this one, and it transposes everything. So that's a better way to copy and paste. All right. Good. Can't find it here. Okay, I forgot to include it here in the description, but all you have to do is the following. When you're calculating the ratios, you have to calculate the net profit margin. You also have to calculate total asset turnover. And you have to calculate, I didn't put right here, asset to equity, which is the equity multiplier. So you did the calculation. So in a pivot chart, put all three of them. Something like this. Select them and make a graph. So I want to see three bars here. One will be the profit margin, the next one, the total asset turnover, and the next one, the equity multiplier. So we can see the trends for those three over time. So after you do all the calculations, it's just making one more chart, and then you can put it in the report. Questions? All right. So, no, that's what's next. Devian. Okay, let's do. It's supposed to be next week, but we'll begin with a little time value of money today. So open a new Excel file. Nice. And let's do some time value of money. Can you tell me the basic time value of money equation? The most basic. Future value equals present value times 1 plus r raised to the n power. Okay. Let's do the following. We can have n iy, or the r. In the calculators, it's iy. And then we have present value. And then you can also have a payment, right? And you can have future value. And we'll do this in a couple different ways. Let's say we have 10 periods. The IY, let's make it 5%. Present value, let's say you go to the bank and you deposit $1,000. And for now, no additional deposit, it's just a lump sum. So I'll make that one 0. So I want to know how much money will you have in, what is it, 10 years? Let's make it annual. On your own, input an equation. Some of you may know how to use the future value function, but make an equation, an Excel function, so you can practice also. Equals, and then you make your own equation. That will be the equation. You'll have that one. Next class will include payments and all of that. Now, Excel has a lot of time value of money functions built in, and I'll show you a couple of ways of using them. One is you type it because you know the function already, and can you guess what the name of the future value formula is? Future value, okay. There's that future value schedule, which we'll use. And then, what is Excel asking me for? The rate, so that would be that one right there. And then you put a comma, NPER, number of periods, so it will be 10, comma, and then payment, we can include it, so it's right there. And then, again, it's asking you for present value, and it's in brackets. So you don't have to input that number, but in this case, we do have one. And what is the present value? Is the 1,000. Now, the sign convention that you learn in your financial calculator applies in Excel as well. So if you make a deposit, then it will be what? Minus 1,000. So I'm going to put a negative sign right there in the equation and then click on the 1,000. Okay. Now, could you have made the 1,000 negative? But then if you have a customer and you show them this and they see negative money, it's confusing. So it's better to hide that in the equation. And then type, if you put 1, you have the following two options. 0, if it's beginning, end of the period, which is the default, and 1, beginning of the period. That would be what? When you're doing annuities, you can have an annuity due, or you can have an ordinary annuity. If you want an annuity due, then you have to put 1 there. In this case, it's not an annuity, it's just a lump sum. So I'm going to skip it for now. Default is 0. Close the parentheses, and it'll give you the same number, obviously. And I want to show you where else you can find all of these functions. Sometimes you're looking for something, and you're not quite sure what is the name, so you can do this. In your Excel, if you click here on formulas, there's all the different categories. There's this one, financial. And then you can see all of the different ones that Excel has. We're going to use a lot of those, not all of them. We don't have time. And they're alphabetically ordered, so let me find future value. Click on that one, and then you get that window. And sometimes you like that better because Excel is telling you what it's asking for. So look, if I click on rate, read the description here. It is the interest rate per period, for example. So it's nice because that way you can learn other Excel functions. I use that quite often when I'm not quite sure how to use the equation. And then what you do is you click here, click on the %, press enter, and then the next one, it'll change the description. But you can click here, click on the 10, and then just go through all of them. Payment. Here, when they're bold-faced, that means that you have to input something. If it's a regular font like that, then you can omit those. But we have it, and we can also put the negative right here and click on the 1,000 and click OK, and you get the same number. And then lastly, so you can learn more about how to use Excel to help you when you have questions, I will do the same thing again. click on financial, future value, and then this link right here, help on this function. If you click on that one, it's going to open the help. And it goes through the equation, the syntax, it describes every one of the variables, and then it gives you an example, and you can copy that, paste it into Excel, and then you can run the function. It gives you the equation. And in this case, I don't see the actual equation, future value equals present value 1 plus Rn, but sometimes it'll give you the actual equation that is using, so you can learn more finance or Excel, okay? So keep in mind that one. So make teams, it is due, model number 1, next Thursday. So go drop it off in my office, because I need to, you guys have to send me the Excel file, and you have to print a hard copy of the report, and then if I'm not in my office because I'm teaching, just drop it off in the plastic box in my door. Okay. So it has to be 3 students, up to 3 students per team. Pick a company, start downloading all the data, and start working on the analysis. Yeah, next week on Thursday.